Financial freedom is all about having peace of mind when it comes to your money life. And that peace comes when you know you're in control. You know how much is coming, where it's going, how much do you need to save every month to meet your life goals, picking your investments well, and tracking those investments regularly. Sounds like a lot of work? Not really. Believe me, it takes 15 minutes every weekend. It's just that you've got to get down to doing it. Let's Talk Money is also about helping you do that. So getting some peace of mind. Let's start with introducing the certified planners on the show today. From our Bangalore studio, Anil Rego, CEO, founder, Right Horizons, and Surya Bhatia, managing partner of Asset Managers. Gentlemen, thanks very much for being here. Surya, thank you. Okay, I think this is an important question which has come in from several of our viewers, and this is of course post that takeover of Fidelity Equity by Larsen & Toubro. Sukanya Srinivasan writes in from Bangalore, 32 years of age. She says the company has been bought over by L&T Mutual Fund, and my husband has invested in Fidelity Equity. I recently read an article which says that Larsen & Toubro Mutual Fund schemes have not been doing too well. Should I then exit or at least stop investing in Fidelity Equity Fund and look at investing in another fund? Surya, lots of questions coming because generally a takeover happens. When it did happen with Lotus as well, people were a little hassled, but here it was a more powerful, a better brand taking over Lotus Mutual Fund. In this case, I think the performance is the big issue because so far L&T Mutual Fund hasn't been a top performer in any of the categories.
Yeah, true. Also at the same time, you have to very be careful and see that whenever the takeover happens, generally the recommendation which comes out is that you should stop and review the new fund house. And here L&T is not the chart busters in any of the schemes. I think the best scheme for L&T is a 3-star rated 3-year fund.
So that's the thing.
So that's a concerning point.
It's not just equity. In most categories,
but at the same time, we should also be knowing that the fund management team of Fidelity is right now staying on with L&T for the complete handover, which could be 3 months, which could be 6 months. So no one should act in haste. There are a few pointers we should actually know. First of all being, make sure that you actually have a long-term capital gain. Don't just get out of it.
Right.
So if you're close to 9 months, 10 months, I think wait for 12 months. Nothing going to change in that fund.
Absolutely.
That's one. Second, the moment the L&T completely takes over and RBI gives approval for the same, they will give you an option to exit without any exit loads. So you have a 30-day window where you will be able to exit without paying any charge.
So that's the time
except
if you want to.
For the Fidelity Tax Advantage Fund, which is the ELSS. It's a 3-year lock-in, so that's, I'm assuming, you have to wait for that 3-year period. But other than that, all other schemes will carry that exit-free window. You can exercise that option. But in the meanwhile, as a thumb rule in any takeovers, you can stop your regular monthly investments, but the existing investments, hold on.
Okay, don't exit in haste. Anil, would you agree with that? More or less that, okay, there is a huge difference between the fund performance between Larsen & Toubro Mutual Fund and Fidelity, but it's okay to hold on for the moment. Don't exit in a haste.
Yeah, definitely. I would rather, wait and watch. Of course, one could review whether you want to continue SIPs and further contributions into the fund till such time that, you are able to see continued performance. But at least, partially maybe we can look at if you have a larger allocation to the fund, look at whether it makes sense to, move it to some other fund. And I think the whole process will take its time. I don't think performance will suddenly drop. The Fidelity team will continue for some time, and that would provide some bit of cushion. And even post that for a few months, I think those stocks will still continue to play out. So we do have time. We can wait and watch and see, what are the changes happening. Is there a new fund management team coming? How is the transition happening? And then take a call on whether to exit or not. At the same time, so it's no point to be really concerned about. I think wait and watch and see how it plays out.
All right, so no hasty exit. That's the verdict from both our planners. Abhijit Mahato, he's joining us on the phone line from Kolkata. Hi Abhijit, thanks for joining us. Tell us, how can we help you?
Hi Manisha and experts, very good evening to all of you. Manisha, I really, first of all, I would like to thank you that the kind of shows you are showing, it's very appreciable, and it's very good. For us, it's very helpful. So my question is that it's regarding the child plan. For just 2 months back, my family blessed with a baby girl, and I wanted to save some money for her education, higher education and marriage. and right now I
Okay.
can invest up to 8,000 per month. So whether I'm a bit confused that whether I should go for the so-called child fund from various companies like Aviva, ICICI, or should I stick to the PPF or some kind of debt mutual fund? Can you suggest something on this?
All right. So first of all, congratulations. What have you named your daughter?
It's Fiona.
Wow, that's an unusual name and very pretty name. All right. So let's just get down to your portfolio. Actually, you're doing all right. You've got reasonably good mutual funds, and I see no reason why you should be looking at anything other than a combination of the classes that we always recommend on the show, which is gold, debt, and equity. Some combination of this, right, Surya?
Absolutely. I'm saying he's having, Abhijit, you are having your portfolio mix for your retirement in these three assets, which I just pointed out. Why be different for your child? Have the same allocation, maybe in a different mix, but have the same allocation for your child's portfolio. Why do you want to go for a child plan for her? There is absolutely no reason. I think he should not.
Yes, absolutely. And there's the sense that he could increase his savings a little bit?
Yeah, I think he has the potential to save, if I'm not wrong, at least by 11,000 odd rupees. He can actually increase his savings by. And he should also need to evaluate his term insurances. I think every time we have been recommending, please change your and evaluate your mutual funds regularly over a period of time. Now, with the changing times, you also need to evaluate your insurances. And this surprisingly also includes a term insurance. Take your example, Abhijit. You are having a 50 lakh of cover for 25 years. You are paying 16,000 rupees. Go online, same amount, same cover, same tenure, you just pay half of it. That's 8,000. I'm saying, why not?
Why not?
Do you have the NDTV Profit app? All the market, all the news and your own homemade, ready-made portfolio available there for you.
We will right now answer what you should sell, what you should buy when markets are down.
Download at ndtvprofit.com/app. Get the best app from the channel you trust.